Well, to start off, maybe we can give one more round of applause to all the students. That was pretty impressive. I don't know about the rest of you, but I'm sure glad that I didn't have to get up here and present on that. And for those of you who don't know me, I'm Alex Hill, and I helped set up the panel that we'll have today that'll hopefully be informative and kind of go off of the theme here. So we're going off of taking something old and making it new again, and we put together this group of local expertise on the properly named creative space. I'll let everyone introduce themselves in detail, but joining us today is Hank Farmer from Third and Urban fame, Ben Haught from Stream, Tim Perry from North American Properties, and David Cochran from Paces Properties. And then moderating the panel today is someone that I look up to quite a bit, and he's gotten a few more gray hairs in the last 5 years since we became colleagues. Sorry about that, Bill. But Bill Mueller and I, we work together at Patterson Real Estate Advisory Group, and we help capitalize commercial real estate projects all around the Southeast and projects of all types. But Bill in particular has carved out a little bit of a niche in the fact that he's become an expert on the adaptive reuse space. And I think that he's probably, everyone up here would say, the best in Atlanta at figuring out how to structure and capitalize these type projects. And they can be really unique and difficult to do. So you're in good hands today, and I will let him take it from here.
All right, well, Alex, thanks for those surprisingly kind words. It's great to be here. I know what it's like to be in y'all's shoes. I did this when I was at Emory. I did the case competition. It's a lot of effort. Y'all's hard work was very apparent today. Y'all all did a really good job, so you should be real happy with yourselves in a yard to be done, and you're eager to find out who won. So we'll keep this short, but long enough to get the continuing ed that we all want. So, as Alex said, we were kind of focused on adaptive reuse. I think it's more aptly entitled Creative Approaches to Real Estate. And as Alex said, all these panelists are experts in that, whether that's taking a bunch of different properties around Sweetwater, aggregating an adaptive reuse office portfolio, or repeatedly placemaking at places like Avalon, Colony Square, like Tim has done, or Ben being very creative in what he's done on the Beltline with Lee and White, and really carving out a niche with Stream. And then David Cochran, who has done maybe some more creative stuff at Krog Street and Hall, and definitely interested to hear what he has to say about the office, the apartment adaptive reuse. So the way we're going to organize this is kind of 3 separate topics. I want to talk about first the demand trends and how those are changing, and how these guys are delivering product to meet the evolution that their tenants are requiring. Demand is something that's kind of evolved in the last couple of years. And then importantly, what happens post-construction? How do you manage these projects? How is property management different for these kinds of assets than it is for something more traditional, and what programming is like? Lastly, where do we go from here? Kind of what's next for this asset class, the institutionalization of it? And we'll leave some time for Q&A from you guys. So we've kind of talked about these guys, but real quickly, I'll let them kind of run down and tell you who they are, so you know who's who and what companies they're with.
Yeah, I'm Hank Farmer with Third and Urban. Bill mentioned our Armory Yards project. We started Third and Urban out 4 years ago, and over those 4 years are either complete or under construction, or about 600,000 square feet of adaptive reuse, primarily in Atlanta, but also working on a project in Birmingham right now, and looking at some other projects in other kind of similar southeastern cities.
Tim Perry, North American Properties. We are primarily, and have historically been since the 50s, a ground-up development company with offices in Atlanta, Fort Myers, Florida, Dallas, Cincinnati, Chicago. But in today's world, the thought of going out and finding green land and developing that is becoming more and more challenging. So looking into things like Colony Square that Bill mentioned, or some projects we're doing in Tallahassee or Cincinnati, where we're forced to go in and be much more creative. We don't do necessarily anything as cool as the rest of these guys do, but but have found that that's it's really an opening in the market where our capital can get the best return, and at the same time, create something special and meaningful for the communities where we invest.
I'm Ben Hott. I co-manage Stream's office here in Atlanta. We are actually primarily a brokerage service company. We lease and manage about 20 million square feet, and then also make spot acquisitions and redevelopments around the Atlanta area. Everything from adaptive reuse to industrial. Billy in the crowd just broke ground on a spec industrial development, so we like to go where the demand is.
I'm David Cochran, Paces Properties. We were started in the 70s, kind of like North American. We started off as a ground-up land acquisition and land speculation company. It was started by my father. It's been an evolving sort of trip to get to where we are today, which a lot of great things happen because of happenstance and sort of serendipitous moments, and we kind of end up in this adaptive reuse space because a neighborhood group kind of objected to what we were doing at Krog Street, and we ended up kind of having to look at a project for the building versus the dirt, and that sort of set us on our way to being kind of focused on adaptive reuse. And now we're expanding sort of the food hall and the adaptive reuse model to other markets. Like right now we're underway in Charlotte and in Charleston on 2 new mill projects that we're very excited about. Thanks for having me.
All right, great, thanks. So let's start by talking about demand trends, what these guys are building, what they're trying to achieve, and how they position their properties. Hank, maybe let's start with you. And I know each project is kind of individually cultivated, but what are some of the consistent themes that you're seeing as far as tenant demand? And how are you physically positioning assets, whether it's office or retail?
Yeah, I think it starts with real estate fundamentals that are no different than any other kind of product type, or if you're talking about kind of more Class A CBD office or commodity office. I mean, it's location and amenities to start. I think we find in a lot of these adaptive reuse projects, we're going where the building stock is, and as we lose building stock to apartments or denser uses, amenities and location becomes more and more of a challenge and a concern. So creating those amenities on site, partnering with neighbors to create amenities. We spend a lot of time on that at Armour Yards with Sweetwater Brewery and Fox Brothers and American Spirit Works and East Pole Coffee, and trying to really cultivate that amenity base and the food base, doing food pop-ups and food trucks and things like that. And then, I think moving to this kind of into the space, we spend a lot of time just thinking about, natural light, volumes of space, indoor-outdoor connections. I think, one of the things we love about these adaptive reuse projects, everyone's different. Everyone has kind of different architectural details that you can highlight. The smaller scale, low slung stuff that we're doing that's more kind of 60s and 70s warehouse buildings. You don't have some of the great kind of true historic details that you have at a Krog Street market or a Ponce City market or a Norfolk Southern, but there's great kind of volumes of space and abilities to do roll-up doors with outdoor patios, easy access to surface parking. So just kind of thinking about all those things holistically and kind of picking and choosing what you can apply to each project that makes it unique, what details you can highlight is some of the stuff that we spend a lot of time on kind of in our day-to-day.
Ben, you've got an interesting perspective on this because you're a landlord. You also do tenant and landlord rep work. And so what thoughts do you have on it, and maybe kind of with the retail-oriented focus at Lee and White and everything?
Yeah, we like to ask why. And the reason why is because young talent wants to be in these projects. They want, you hear the term experiences. But then I think you have to keep asking why. And the thesis that we've come up with at Stream is that our lives have become very similar. We all have the same phones. We all use Outlook. We all use Excel. Whereas 20 years ago, people had very different lives. Some people would spend their time on the phone or traveling, and jobs were different. Now we all have pretty much the same life. We use the same operating system for everywhere. And so there's this deep demand, this desire, I think, and especially it's coming out in our younger crowd, to be unique. And it becomes unique through experiences. And our younger talent can't necessarily afford a cool home, but what they can do is influence where the business and the companies choose to office. And so that's why this is happening. So the talent is saying, hey, I want a unique experience when I go to work because I can't get that at home. I have to live in a concrete box with 240 other people. And so I want you to do this for me. And then now we're in a market in which talent is speaking. That's why everybody's moving to Midtown, is to be closer to talent. And that's why this product type is flourishing, is because that's where the young people want to be.
No, so you're, with a little bit of a residential focus there, I mean, maybe it's a good transition to Dave. I'd love to hear your thoughts on kind of a different angle, your experience at the office, how you repositioned an office building that was dated and turned it into a pretty successful apartment project. What did you recognize there, and what were you trying to deliver?
Well, just like with the question of why, with the adaptive reuse, the building is what's driving all of us to, obviously the location is important, and then the building is what draws us to the actual site that we end up buying. So the building in and of itself is there. So then you got to ask yourself, what does this need to be? And you walk into these older buildings that were one use, and you're going to transition it to another. And there are all these unique facets of it. You've got an old office building that has a lobby that's got 25-foot clear in the first floor. That would never exist in a multifamily building. So you start taking all these spaces and transposing different uses or potential uses in it, and that sentiment, and it's very guttural and very sort of subconscious. When you walk into those spaces, when it's a residential condition, you feel it. And it's that unique data point that's kind of stamped on someone's mind when they go tour a potential apartment. That everybody loves the sparkling pools and the great workout centers, but what they take away is that feeling, and therefore when they think back, they go to that feeling, which was positive, hopefully. But truly what we saw there was a building that had been hiding in plain sight for 30 years. I mean, it's one of the bigger buildings in downtown that people interact with on a daily basis in their cars, but yet no one truly had ever noticed it. So, I mean, in our minds, we said, all right, if we finish this and people think, hey, what's that? Then it's a win. It's almost like we just built it brand new. But you take a place that people used to go in as kind of drones, it was a call center, and convert it into this place where people can go live and experience and actually, have a good data point in their lifespan. That was the goal. The true biggest goal that we had, though, was we wanted to prove a point that downtown Atlanta was not just this place for office buildings and tourist attractions. Atlanta's downtown has had a tough road, but frankly, the resurgence of downtown had been talked about for 15 years, and people had been hoping for it to get traction. And we just needed to convince a couple of different people to invest $60 million to prove that point. And thankfully, we were able to do it. And people showed that they really did want to live and experience downtown 24/7. And it was a great project. It was very rewarding. It ended up doing very well financially speaking as well. So we were very pleased with it. That it was one of those opportunities to just take something that was kind of sad, cold, austere, and turn it into something new, vibrant, warm, and just a really unique experience. Very difficult, but we were glad to do it.
So a lot of these have been existing assets. Tim, you've got a lot of experience in developing, and particularly in suburbs, which might tie into the case study today, especially in Gwinnett. I'd be curious to kind of hear how you're, without transforming something that's already there and existing, how are you recreating this, and how are you meeting, this kind of new demand in some of the suburbs?
Well, we approach all of our investments. Actually, written on the wall in my office says, Rule 1, don't ever compete on price, right? Differentiate it yourself on anything else. Rule 2 is focus on top line revenue, and Rule 3 is make sure you do Rule 1 and 2, right? And so we always seek first to differentiate every asset, turn every asset into an 18-hour energy center, and create that, David said, that kind of intrinsic, that emotional connection, the heart share moment with all of the properties. And in town, you can look at it, we start with what does the community want? Community outreach is the new term for marketing. You reach out to the community, you see what they want, what they need, and where something is going to fit, and then you can deliver that, merchandise it, develop it to that segment. In the suburbs, you've got to find the right suburb. I mean, Avalon was the right time, the right place. It was kind of the right everything, and it proved to differentiate itself from the market and really create in the suburbs what people were intrinsically feeling by being in town. We set out from the very beginning and literally had a plan and said, we want to put an ice skating rink here in the winter. Wouldn't it be a cool sound bit to say it's the same size as Rockefeller Center? Okay, well, let's move the buildings so we can accommodate it. And we absolutely started first with how people arrive and how they interact and how they feel and how they connect and how they use the property. One of the examples that no one really ever realizes that we like the acorn symbol. Some would say that's a hospitality logo, and it's in the logo for Avalon. From that, we decided to use oak trees at Avalon. Well, oak trees have squirrels, so around the property are 12 bronze squirrels. Those 12 bronze squirrels are all doing one of the brand values of the property: technology interface, creating communities, families, culture. And they're spread around. You can actually go on a scavenger hunt for the squirrels. And, then you go to the child play area, and all the equipment is squirrels, and they're all doing something healthy. They're doing bench presses with acorns and stuff. No one knows all this, right? But all of that, asking why and digging down, creates that emotional connection, that feeling at the property. We approached Colony Square. We're approaching Colony Square. It's under construction the same way, and then recreating it in Gwinnett, actually, where we're in a public partnership with Gwinnett County, where they're going to build some parking decks to replace the parking there at the Infinite Arena, and we're going to redevelop all of the surface parking into a mixed-use project.
So I'm curious, as one of the challenges that I've always heard, just in construction in general, but also in adaptive reuse, is that you're taking something that is somewhat tired looking. It's hard to perceive, I would think, turning an office into an apartment building would be hard for a tenant to grasp and visualize. How's the pre-leasing going? It's kind of a question for the group. Is it hard to pre-lease these buildings? Has it gotten better here recently as this asset class has matured and gained more acceptance?
I would say yes. I mean, generally, we're always surprised that tenants can't visualize the space in the same way that a lot of people in this room can. And in some instances, projects don't lease until you're doing the punch list and landscaping's in. And it's a point of frustration. We're trying to use virtual reality and some technology to help overcome that gap. But generally, you have to take a lot more risk, I think. But
yeah, I would agree with you. I mean, sometimes you can refer to pre-leasing as before you start the work or while you're doing the work. If you're doing the work, the pre-leasing can be an easier task because you're building, you're doing what you're saying you're going to do. If you're selling a vision and the site's dormant, it's tough for a lot of reasons. One, the vision is just what you're showing them on a piece of paper or with the goggles on in the 3D virtual reality. Two, you can't pinpoint the end date because you haven't started yet. And three, everybody that's a tenant, office, retail, doesn't really matter. They've been scarred, or a friend of theirs has been scarred by some unscrupulous developer. So I think all of those aspects, and a lot of these tenants that we all interact with on a regular basis, are not the types of tenants that pre-lease. They're not. They're usually not the class, AAA credit guys. They don't forecast 5 years out when it comes to how to, execute on their business plan. So it's difficult. The best way to lease, I think in an office product, frankly, is when it's almost done, because everybody else will, they value it on a much higher level if they're standing in the space.
I agree.
Yeah.
I think the good thing there about adaptive reuse though is you're not looking at a $400 basis and you're not looking at a 24-month timeline. So you get equity investors and you get banks that are more willing to lend to you on a spec basis. I mean, you think about kind of a typical adaptive reuse project, and if your equity is kind of the contribution of the buildings, a bank that's looks at it, they say, well, we're only 30% levered before TI and lease commissions. So there's a good kind of natural hedge built in there for the adaptive reuse space. But I agree with the same things David and Ben are both saying, just as really interesting, Armour Yards in particular, to watch kind of tenant interest as we were moving along in construction on to kind of delivering our first buildings. And we take kind of a strategic approach on, we've got kind of a phase 2 of our complex West Midtown deal. It's called Inland Tract over off Huff Road. And we've been starting pretty much all of our tenant tours at Complex because it's completed and saying, look, this is the finished product. We're about to go over and look at some buildings that used to be freezer cooler space, and the slabs are all torn up, and they're pretty ugly and looking pretty bad. But just kind of keep this experience in mind as you're walking through those old buildings and you're stepping through this like 55-gallon vat of hot sauce that Inland Seafood spilled all over the place. And it's like still on the floor. We're like trying to clean it up and get the hot sauce smell out of the building. So, we try to take that approach. And I think it's important too. David talked about kind of unscrupulous developers that have kind of sold a bag of goods that they didn't deliver on. Showing those renderings, seeing kind of the progress of renderings to delivered product, and maintaining that, and trying to build a track record where people will say, oh, I've interacted with Third and Urban before, and the projects that they deliver are what they say they're going to be.
Any kind of consistent, significant challenges that you guys have experienced in your development, the construction phase, before we kind of move on to post-construction? That's
Cost.
Yeah. And time.
Do we have 5 hours to go over this? Oh, yeah, I mean, the unknowns. I mean, a lot of these places are old manufacturing facilities, so if you get into the dirt anywhere, it's terrifying. I mean, on our Atlanta Dairies project, we found a house underground, 2 houses actually, and we found 7 loading docks in an existing slab. So basically, as manufacturing facilities grow, as opposed to, they just add another loading dock on top of the next one. And that pit in between, they take all their trash and throw it in there, and then pour a bunch of concrete. And if you have to get into that, you need a tank. And it's kind of the problem that you expect. Sometimes you just get much more than you expected.
We couldn't compact the parking lot at Ellsworth, and finally we started digging and we found 8 mattresses, and that's why we couldn't compact as
Oh, that's awesome.
so, yeah, I echo that sentiment.
At least yours were mattresses.
Yeah, that could have been way worse. Yeah, that's right. Yeah.
It's wild. All right, well, let's move on then. One thing that I've learned is that a big part of a project's success is what happens post-CO. And that is, how do you manage your property? What's the program for your property? You guys have touched on that a little bit, but it seems like the word experiential gets thrown around a lot. The soft goods, breweries, things like that. I'm curious, how do you think about that tenant mix, and how are you curating that specifically early in your project? And then we kind of go from there.
Like I said earlier, we look at everything for a 18-hour activation of everything we do. We start each project catering to that and merchandising to that. I hate pre-leasing on office because I think you leave a lot of money on the ground if you can create, or you don't pre-lease apartments, but you look at those ancillary uses. If you kind of get the street level right, I mean, if you get what people see and what they interact with right, and that experience, then the office is going to be 20% higher than the market, or the residential is going to be 20 or 25 or 50% higher than the market. So we find a lot of bumps in that, but operations is key. Going back to Atlantic Station, when we purchased that, we quadrupled the marketing budget. We run these things at extremely high cost from a marketing and activation standpoint. But it's what people want. In fact, we actually trademarked the word experience maker with a capital E and a capital M, and consider all of our employees experience makers. But then look at our customers, right? Our customer, when we used to build power centers, was the Gaps and the whoever else is, kind of boring stuff. You swept the parking lot, you kept the lights on. Now we look at these customers. There's no customers. Customers are guests, and their customers are our guests. And we treat everyone who comes to the property like a guest. We put everyone in our management team through the Ritz-Carlton's 5-star hospitality training service. Even the heads of the security or the parking, the subcontractor, we put everyone through it because it's extremely high touch, it's extremely hospitality focused.
And from a tenant mix standpoint, we see a lot of breweries, maker space, smaller footprints in their rentable square footage. I'm curious, it seems like those could be kind of a leading cost drag potentially relative to the office if you put a brewery in early in a project, but it also seems like they create a lot of upside and create a lot of action. I mean, how do the capital markets look at that? What's the thought process on getting some of these small retailers in? And David, I know you do a lot with the food halls, so I'd be curious to get your thoughts there.
I mean, the food hall was, we arrived at that through many sort of like machinations of design as well as, sort of serendipitous moments again as to how we arrived there. I mean, it was one of those projects we couldn't figure out what to do with it based upon what I had done throughout my career, because it was a really oddly shaped building, and it was one of those things you couldn't cut it up like a loaf of bread. So all these sort of, data points came together and we ended up there. Now, that was not the hard part. The hard part was taking that concept, which was relatively unknown in the Southeast, and promoting it in a manner that the tenants we wanted gravitated to it and basically bought into it. The hardest part is you're not going to get any pre-leasing in that, and the lending world is now more accustomed to seeing this food hall concept, but at the same time, back then, that was, I had to sign my life away to get a loan on that deal, and then just hope we were able to perform. But I think the lender bought into it, obviously, on some level, because they still were able to give us a loan to do the work. But we really had to, if we didn't believe in the concept at its core, I don't think we would have been able to been successful in actually implementing it. I mean, I think the people we were talking to, we were asking them basically to carve out a section of their concept and put it into a building. Because these concepts really didn't exist. We were telling you, like, take a piece of yourself and put it in this box next to 30 other boxes of people you tend to not want to be near when it comes to your typical concept. And y'all are all going to get along and do well together. Like, heads just exploded. But it really took us believing it to our core, I think, and that really resonated to the tenants, I believe. And then a lot of that is just sort of momentum based. I mean, you get the person you really want, convince them, and you get a buy-in or a take from, one person can do it sometimes. And then it can basically justify everybody else's beliefs that they want to be a part of it, but yet they're not willing to take that first step. And then it kind of can roll. But you really do have to, promote that sort of curated tenant mix to the person you're talking to, because they want to know who they're potentially getting into the box with. And we did that, and thankfully we were able to deliver. But we basically told people, asset, sort of concept categories of where we were going to put them. We had to be very thoughtful as to that, and we learned a lot at Krog Street. I mean, some of it the hard way. We now curate down to the level of, here's the box we're going to offer to you in the location of the building, period. But not like you can't just pick one, and there's reasons why. I mean, you don't want certain sort of elements to exist in a row, and it all sort of flows together. And at Krog, we didn't manage that as well as I wanted to. It's all sort of worked out, and it's all kind of grown into its own. But that's how detailed you've got to get, I think.
Ben, I know you got. Oh, go ahead, Tom.
I was going to say, and you've got to put them in business.
Yeah, right, exactly.
I mean, that's actually the harder part that
Yep.
the capital partners have to get their head around, right? I mean,
Yeah.
you're putting restaurants in business, and to
Exactly.
some extent, y'all react. They just food the new anchor.
Yep.
Monday Night Brewery seems to be going well at Lee and White. Kind of activated that area.
Yeah. That came about, again, listening to demand. We were getting a lot of calls from breweries about our Apple Valley project, but they couldn't pay the rate, and we just had a light bulb moment. And the honest truth is, all we had was an idea. We did a press release with the Business Chronicle and let it rip. And thankfully, my son was in preschool with Joel Iverson's son, and so developed a good relationship with him over the last few years. And we feel like we're changing Atlanta for the better down there, just by adding a brewery.
Hank, I know you guys, I think, have somebody dedicated to programming, and you have a different view of what property management means today. Be curious to hear your thoughts on how you look at it differently versus traditional asset classes.
Yeah, I think these guys have been kind of talking more about retail, but and typically that's what you think about when you think about curating a tenant mix. But we try to think about it a lot on the office side too. I mean, we want like-minded companies, but we also want companies that come from kind of different sides of the creative spectrum. and different sizes as well. I think Armour Yards is a good example there, where on one side you got Coyote Logistics, that's a subsidiary of UPS, and they took 55,000 square feet. And then on the flip side, we did these studio suites that's 7 studio suites that range from 700 to 2,200 square feet, have a shared conference room, shared break room, kind of our response to the next step beyond co-working as you're moving out of a co-working space and looking for something that's more of a permanent home for you. And then, from the capital market standpoint, looking at that and saying, well, we feel really comfortable with that kind of those smaller suites with 3-year lease terms, because it's only 10% of the overall portfolio in the building, and we're talking to those tenants about growth potential. We've got one right now that likely is going to expand into 10,000 feet from 2,500 square feet. And so I think it really it becomes a pipeline for potential tenant growth as well. On the property management side, Tim talking about kind of that experience, I think it goes for the office user as well, where I think co-working has done a really good job of kind of opening some people's eyes into what that kind of community management can look like. As Bill said, we've got a full-time guy that's doing kind of community management that's supplementing our property management team. So he's the one that's really running kind of events. He's the one interfacing with a lot of the tenants. Just that higher touch. I think if we learned anything from kind of the Jamestown retail approach, and it's very similar to North Americans, it's that tenant as a customer approach. And I think office property management historically has maybe been a little bit more tenant as an adversary. And I think we're doing a better job of realizing at the end of the day the tenant really is very much a customer.
Great. All right, well, let's move on to kind of the last section here with the time that remains, and that's kind of what's next. I mean, Hank, you said it earlier, you talked about existing building stock. Is there enough building stock in Atlanta to continue this authentic growth, or are we really looking at new development?
I think authentic's probably a relative term. I mean, adaptive reuse is probably, you look at kind of the evolution of adaptive reuse, and maybe it started as kind of historic rehabilitation, which we do a little bit of, but isn't really, to me, is very different than adaptive reuse. I mean, look at the office, that's a great example of adaptive reuse, and how many 60s, 70s, 80s warehouse buildings, office buildings, apartment buildings do we have in Atlanta that could use a new life, and that new life could be the same use as before with kind of a full gut rehab. It could be a total change in use like the office. But I think we just have to be nimble in kind of how we think about that, and not kind of lock ourselves in that adaptive reuse can only happen in 1920s brick and beam warehouse buildings, or kind of take your pick on kind of the product that's in vogue at the moment. But at the same time, I think as I said before, it's a lot about kind of how you're creating space and how you're delivering that space to the tenant, and the experience. And I think there's certainly opportunities to do that in the new construction format. You're seeing that on some buildings that have been announced on the west side, such as Star Metals. I think they did a really good job of designing a building that will be kind of woven into that neighborhood in an interesting way. We like the fact that we're 60% of the basis of that project, and I think that's a huge advantage of adaptive reuse. That and speed to market, but I think there will always be opportunity. It may just not look exactly like the opportunity looks today.
Well done. To expand on just one part of it, and I think it's basis. I think new construction cost is heavy and has grown to a point where it makes the yields thin, it makes the underwriting tough. You've got to push rents and kind of get into an uncomfortable place with a lot of these. So, Colony Square, that's a huge redevelopment of the ground floors, hiding in plain sight. There's going to be a food hall, a theater, lots of restaurants, but we don't even think about the office. We really don't. We make sure that we know all of our tenants and they're taken care of, and we have a lot of activations and events and food. And we focus on them, but we're just trying to get everything down in the redevelopment piece correct. But there's a lot of talk, and all of our equity partners are launching new funds and billions of dollars looking at value add. Right? And value add, I saw a grocery anchored retail center for sale last week. There's value add. It was 100% leased. I mean, stamp value that on the package. But where you can add that value, I think, is in the adaptive reuse, is finding buildings where you've got a basis and a lot of room to run with your income side before you start hitting the rents you need to justify new development.
Yeah, the only thing I can think of to add on would just be retail is probably not having its best moment right now, and so there's an inherent opportunity where that is in altering retail for other purposes.
The only thing I'd add is that, yeah, the building stock, and I agree with Hank completely on this, is building stock in Atlanta is not vast. I mean, there's some great stuff out there, but I think I personally believe in both models. I believe in the adaptive reuse sort of renovation approach and the new construction. And I think the best world, truth be told, I think is coupling them together, is having a little bit of each, where your basis is better on the existing building. You've got a component of new construction. I think they really do complement each other very well. And I think some of the buildings in Atlanta that we're getting ready to do our first adaptive reuse from the adaptive reuse. The use is not that different. It's a flop house motel now, and we're going to turn it into a boutique hotel. But it's one of those projects where the flop house hotel that it is today, which is the in-town suites, is really a detriment to an area. That by changing it and delivering what I think is a great opportunity in that little submarket of a boutique hotel, but it's also going to kind of take a really tough element of that area away and replace it with a good element. And I think that it will cause sort of that last little node of Piedmont to kind of fully mesh together. And you got forces coming from both directions, but you can't connect because there's this insurmountable wall of my hotel. Sorry. But we're finally getting ready to get started on it, and I'm pretty excited about it. And we don't do hotels, but the what is what drew us to this. So we just go out and find the best hotel operator we can find, which we found Bunkhouse out of Austin, Texas, which took a lot of sort of just banging on their doors. But sometimes the building itself draws you to the product type that you deliver.
I would say, since this was all about Gwinnett Place Mall, right, it is very, very difficult to do. And in many cases, it's so much easier just to start with a blank slate and just design something and build an apartment project than it is to do the adaptive reuse. And there's a lot of, we're going to redo malls, Oh, sure, Macy's is struggling. They'll give me their box, right? No, they're going to you're going to pay a premium. They're going to make life really, really difficult to get control of all of that real estate. We're working on a project that has a Bon-Ton anchor. And they're bankrupt. We ended up we went and bought bonds in the company so that we had a vote and could influence other bond members to force liquidation, so we could actually get to that store and and redevelop the asset versus a corporate takeover where somebody's going to buy Bon-Ton and keep operating them. It is so hard to get control of some of these assets before you redevelop it, especially malls.
That's great. Well, I think we've got a few minutes left for questions from the audience. So if y'all have anything, raise your hand and we'll let you ask. Y'all answered everything, it seems like. So, all right. Well, if there's in the back.
Jim, where can we get a copy of those 12 squirrels?
Go to the concierge desk at Avalon, exactly.
I'll go find them next week.
Yeah, good.
All right. Well, I guess that's it. Guys, thanks so
Thank
much
you.
for your time, and let's hear who won.